Good morning. My name is Mike Haltman. I'm the CEO of Hallmark Abstract Service. We provide title insurance in New York for residential and commercial real estate transactions. Today, I'd like to talk about something that's not being talked about a lot, which is the yield on Japan's 10-year government bond. For decades, the interest rate in Japan that institutions there could get if they invested was hovering around zero. Right now, the yield on the Japan 10-year bond is over 2%. Actually, it's over 2.2%. Why does that matter to us? Why does that matter to real estate in the United States, to home buyers, to commercial real estate owners who may need to refinance a mortgage? Because for those decades, the investors in Japan would take on U.S. debt by hedging currency risk. They would convert the Japanese yen to U.S. dollars. They would buy our bonds. The cost of the conversion or the 10-year yield in the United States minus the hedging costs would still give them a 1.5 to a 2% return. Very, very worthwhile given that they were earning nothing at home. So the reality is now that they can earn 2.2 or 2.27 with no hedging risk, with no currency risk, with no geopolitical risk, a lot of that money is staying home, and Japan owns about 1.2 trillion of US debt. So while they're not going to dump that debt, they may not be buyers in the future. And that can have an impact on interest rates and mortgage rates because, as we know, the US government is selling an enormous amount of debt and they need to attract buyers. So if you go to the description below, I have a link to an article that I wrote at Substack that describes the whole situation. And if you're involved at all in US real estate, it's really a topic that you need to know about, that you need to understand. So if you have any questions, my contact information will also be in the description below, and I would love to talk to you. Have a great day.